Thursday, August 23rd, 2018, Monaco 64, home of alternative economics and contrarian views. This morning I'd like to talk about Jim Sinclair and what he's recently said about gold and what you need to do. And before I go into the story further, I also like to say that what I talk about here is my opinion and it doesn't constitute advice to buy or sell anything. It's just trying to give you my thoughts from my experiences in the market, and hopefully that will be helpful to you. But in the end of the day, it's up to you to do your homework, of course. And before I start further, I'd like to thank everyone who's been contributing to the channel through Patreon, through the Monaco 64 store, through small donations or whatever donations they can make, and also through the live stream, through the super chat in which you can donate. This is an example of what we sell in the Monaco 64 store and the Fed mug. Monaco 64 and the Fed mug. There are other things there as well. Billy mug. Billy's not here right now. He's still upstairs this morning. Before I go further into what Jim Sinclair is saying, let's have a look at where the markets are this morning. It's 8:13 a.m. London. Gold has actually in the last 20 minutes, when I logged on about 20 minutes ago, gold was around 11.92. Then I was reading something and I came back, it dropped to 11.86 in a matter of minutes. So right now we're 11.88, still above the August 15th low of 11.60. Right now 11.88.60, down about 7. The high's been 11.97. Yesterday we got up to 12.01 intraday. I saw that there's a very good trend line coming from the recent drop. Right around 1200 it was yesterday. So I bet the bullion banks and the powers that be were looking at that line. They look at technical analysis as well, and they defended that line for now. Spot silver down 15. So yeah, gold is down just under 0.5%. Silver is down 1% at 14.59. That gold silver ratio is quite elevated right now, so not much higher there. I don't see it go much higher, and if it does, it will be a huge anomaly. The Dow excuse me, is down 8 points, so virtually unchanged, 25,719. S&P 2860. Nasdaq, all the stock markets are unchanged. Nasdaq 74.21, slightly lower, not much at all, fractions of a percent, or fractions of 0.1%, I would say. Currencies are a little lower this morning. They rebounded yesterday, but they don't justify the move in gold. But right now things are not normal in the currency markets. And I say currencies because gold and silver are traded as currencies. They are the ultimate form of money, of course, as J.P. Morgan said in 1913. I'm not sure exactly the year, but in Congress, when asked what gold was, he said money, everything else is credit. So the pound right now is, the pound is down this morning, 0.25% at 128.80, so down 31 pips. The euro is down 0.25% as well at 115.65. And the dollar is up 0.25% against the yen at 110.82. And the dollar is up 0.33% against the Chinese currency, the yuan, at 6.86. And this morning we've seen the South African rand come off quite a bit. Apparently President Trump made some comments about the racist land confiscation. I say racist because it's the government there has a policy of now confiscating land of the white farmers. So the rand is 1440. The dollar is 1440. It's up 1.7% against the rand, South African rand. Turkish lira, the dollar is at 608, so that's kind of stabilized for now. And yesterday the Brazilian real dropped to recent records. It managed to close below the highs around 410, I think it was, the dollar, and we closed at 405. So those are the emerging market currencies. And it's a good place to segue into what Jim Sinclair is saying. Subscribers, and he's also written to the people who follow his blog. To be honest, I don't subscribe to his. He has a special subscription service, but his how can I say, his blog is free. I've been following him for ages, since 2002 when he started his blog, jsmindset.com. I've communicated with him years ago when I was still working in the city. He used to talk a lot more about the technicals, but who is Jim Sinclair? Well, he's part of this gang here, our crowd, the biggest, the great Jewish families of New York, the banking families. His name, his father's name was Bert Seligman, a great friend of Jesse Livermore. And the Seligmans are part of, they're not as well known, but they're integral part of like the Goldmans, the Schiffs, who else? The Kahns, the Guggenheims. They're all kind of, they all intermarried. They're all in banking and money. For some reason, I don't know why Jim Sinclair uses the name Sinclair, but he's the son of Bert Seligman. And this is what our crowd says. Here are the Seligmans, transformed overnight from peddlers to financial advisors to presidents. Here's Jacob Schiff. Here's Otto Kahn. So, yeah, Jim Sinclair, he's from that kind of background. And yeah, you might say, oh, he's he's the problem. He's from a banking family, Jewish. But I can tell you, Jim Sinclair is a good guy. He's been trying to help the public for many years, what to do and to protect themselves. The 70s and early 80s, he was Mr. Gold. He was the biggest trader on COMEX of the gold futures. And he got out right near the top in January 1980. And he talks about that. And he even remembers the price to the exact decimal. He always talks about how gold topped at $887.50 in January of 1980. And he has admitted that he was told by people, you know, the insiders. He's well connected. He's probably got cousins who are Warburgs or Schiffs or whatever, or Guggenheims, because they're intermarried. And that's why he got out at gold at that price. He's admitted it. He's saying now, when is now? So he's urging his followers, subscribers to be careful. And I'll read a little bit here from the letter he sent, or I got this through my email, but it's also on the blog right now. If you go there, jsmindset.com, I'll put a link to the to what he wrote here as well. And he says, my dear friends, we will keep this short and to the point. As time goes by, you will come to know all the ingredients of the fact that economic law lives and is the process of reasserting itself, and is in the process of reasserting itself like a hot solar storm on the surface of the sun. And I'd like to say another thing. This is how I've learned a lot of what I know, not only through being in the markets, but through reading people that like Jim Sinclair and others. That's helped me develop the way I think. So he's one of the guys I really admire and follow closely. So he goes on to talk about MOPE. He says MOPE. Well, what's MOPE? M-O-P-E. It's Management of Perception Economics. And he came up with that term actually like a decade ago. He says MOPE has failed and the world is about to implode economically and socially because of it. Your question to all of us has been, when will all this happen? Well, it's been your question to me as well, and it's hard. It will happen, of course, because it's not sustainable. The answer is now. Well, he's putting his neck on the line there, saying it's going to be now. This means this occurrence is accelerating uncontrollable volatility in the world fiat currency markets. So this is what I was talking about the emerging market, fiat currency markets. It says the rise in the dollar here and now is due to Richard Russell's thesis of the synthetic dollar short. Richard Russell died a few years ago. He's the grandfather of the newsletter, market newsletter writers. Synthetic dollar short. So this can be easily understood by remembering that the currency you borrow will fluctuate. If that movement is up, then you are at a loss considering where it was trading when you borrowed it. And he goes on to say, the titanic forces of economic sin in the theory of management of perspective economics, which was identified by us, Jim Sinclair, only and no one else, more than a decade ago, is the most ignorant concept. Well, management of perception is just trying to brainwash people, trying to give them propaganda to say everything's great, unemployment is really low, even though 95 million people are out of the workforce, the GDP is growing really well, even though the only reason it's growing is because you've borrowed like trillions, in deficits, right? The government. If markets could be controlled globally, the laws of economics could be canceled and depressions plus serious recessions eliminated forever. They cannot be. And I agree with him. If we could print money forever like this, there would be no poverty in the world. But we know that printed money or money of it in itself is not necessarily a prerequisite to wealth and well-being and prosperity. Value is, in my opinion. As he says, they cannot be eliminated forever, these forces. You will witness this very soon. So I continue here. The equity markets around the world have been celebrating the cancellation of economic law. The Austrian School of Economics and all the teachings of David Ricardo, and Adam Smith have been declared dead. The ascent of the devil of artificial intelligence operated by most advanced computers has resulted in market manipulation so huge that there's no historical precedent for the volatility that the end of MOPE will produce. And he goes on to talk about how Goldman Sachs, he doesn't mention it, but Goldman Sachs have gone to having a quarter of its workforce become computer programmers. He also says of Goldman Sachs, but he mentions it as a major international financial house. They have reduced their trading department from 500 people to one person only. So, and he goes on to say here, as it relates to the emerging markets like Brazil, Turkey, South Africa, and I quote, finally, according to the laws of economics, the U.S. Fed, having extended its balance sheet insanely, has lost control of its internal, i.e. in the U.S., and therefore external monetary policy, which is what happens in the outside world. The run-up now in the dollar because of the technical dollar short is the death knell of the fiat money system. I've been saying that as well. It's just starting at the periphery. It is the product of a spreading panic in the non-reserve emerging market currencies. It is the currency of Turkey, and Venezuela, Brazil, Argentina that have fallen hard and fast, with Asia to follow. That is the pending weapon of mass economic destruction. The only way to stop it is for the U.S. Federal Reserve to go ballistic in global QE, followed by all the developed world central banks in unison to provide dollars demanded by the debt instruments of this unwind. You will witness the move to hyperinflation in the useless attempt to continue the ignorant game of mope and hold economies and the fiat system together. And he goes on to conclude that there's no answer other than gold to save yourself. And I agree. And silver. What about prices? Well, he talks about prices here. He says the price of gold will be a product of the size of U.S. debt now outstanding. And that's right. Gold is money right now. Fiat dollar is backed by debt, so there is a great relationship. He says gold always balances the balance sheet of the U.S.A. as it did in 1980 at 887.50. And he goes on to say, if we really had the gold at Fort Knox, then the price of gold would rise to slightly under 17,000. Since we do not, 50,000 or more is a probability. So there you have it from Jim Sinclair. I know it's very frustrating, but as Rudyard Kipling said in his If poem, he said, yeah, people might be dealing in lies all around you, but it doesn't mean that you should deal in lies yourself. And even though it's very frustrating to keep kind of the faith and know that intellectually you're correct about these things, it's hard to stay put, sit tight for this. But it will happen. The laws of economics cannot be broken forever. If they could, there wouldn't be any misery or poverty or inflation in the world. Jim Sinclair has also written a book, which I've talked about before, called A Pocketbook of Gold, a survival manual for monetary mayhem. He wrote it along with a guy called Peter Carlin. I'll put a link in the description to where you can get this book, Pocketbook of Gold. You might want to have a look at it. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on DTube, Steemit, and on Twitter. I'll talk to you later. Take care. Bye.